Very well. Dipan Mehta is with us, Director at Elixir Equities. Dipan, good morning. Good to have you here. Sorry, coming to you a little late, but you heard the management of Zen, and again, defense is a kind of a constant theme with us. We are later speaking with data patterns. What do you, what to do with the space? What to do with stocks? Dipan, in your assessment, big run-ups.
Yeah, Prashant, good morning, and thank you for having me on your show. I remember going to Zen Technologies plant in Hyderabad 20 years ago, and I had bought the stock also, but then it was not going anywhere for so many years. And then I, threw in the towel and sold the stock. I wish I had held it. It's been a fabulous multi-bagger, and it's in a super space to be in, the right place, right time at least for the company. And I think great prospects. Very good interview. He's targeting 50% turnover growth, which is fantastic. Perhaps may justify the very rich P multiple it is trading at. So very positive on the stock, but would look to buy at declines because valuations is certainly on the higher side. Also, one needs to remember that if you look at the history of the company, there's sort of volatility in the earnings because of the government procurement plans and order book position may change quite a bit quarter by quarter. But nonetheless, I think great prospects for the company. And even with data patterns, I think across the board, we are seeing very good interest in defense. I know it's a great story for next 2-3 years, but look, valuations are on the expensive side. So I'd wait and watch and try and buy declines.
Just to make that point, Dipan, we are at CNBC-TV18, we used to put out a mid-cap mania, a segment long time ago. And I recall covering the stock at around, explaining the stock at around, I think, 100 rupees or thereabouts. And then I got so much of this feedback, even I was wondering, what's happening. But at that point of time, the story was more about the simulators. Yeah. And then it seems the bull sat on the drone and, that's what took off. So, something else played out. And that's why the stock has done. But I remember that period when there was no orders that came in for multiple years as well. So we just, to alert our viewers. We had explained the stock long time ago.
Well, and look at it today, fully discovered. Actually, still not at its, 52-week high. It's still off. The high was
at 1,000 crores, we explained it. At 1,000 crores.
Yeah, I was like 100. Wow.
at 1,000 crores, the share price was 100.
Oh, at 1,000 crores market cap,
yes.
And the share price was 100. Whoa! And look at it today, 1,700 plus.
A viewer just told me, that's why I remembered it.
Dipan Mehta is with us with what he thinks of the markets, stocks, etc. Dipan, thanks for waiting. Towards the end of last week, one of the names which came under intense focus once again was IndusInd Bank, for the wrong reasons once again. Any thoughts here with that, newfound accounting problem in the bank? I mean, markets, if you look at the stock reaction post that, there was a knee-jerk reaction, but that was bought into. Markets are looking ahead. What's your sense?
Yeah, Prashant, very disappointed as a shareholder of IndusInd Bank that the bad news keeps on coming in. And really, I think from an investor's perspective, I would like to say that the trust factor is lost with the bank. I'm not sure it is going the Yes Bank way or, there are even more frauds or something like that. But the way the bank has been managed over the last few years or so certainly is very disappointing. And I do hope this is amongst the last of the negative disclosures which they have. Look, you buy into the bank because it has distressed valuations, and still the core operating model, the brand, the middle-level management team, the technology platform, all of that is state of art. I mean, it's pretty decent compared to its competitors. And investors have in mind that, other banks like Axis, ICICI, also they had their own situation when there was a lot of turmoil in the management and as well as in the business of the company. But then they recovered very well under a new CEO. Something similar could play out in IndusInd Bank also. Let's see who the new CEO is and what their vision is and how they rebuild the top-level team. Because the foundation of the bank is strong. It's just that it seems to have lost its way for the last few years or so.
Oh, yes. And those hits keep coming, as they say, right? That's the problem with IndusInd Bank. Take your point, Dipan, on this. I want to draw your attention to Bharti Airtel, because Bharti is doing something very interesting, right? I'm sure you've seen the weekend news flow. Now they've gone and told the government that relief should come to everybody on AGR. Why just one company? Why just Vodafone Idea? And they're saying that even our operations will be impacted because of the penalty and the interest. At least waive that off. Not sure how this plays out, but how are you watching this space? On Friday, Vodafone said that we cannot continue operations beyond FY26. The government needs to do more. Your thoughts on these telecom stocks?
Yeah, I think whatever the outcome of this is, it's going to be positive for Bharti Airtel. And on the whole, I think I was very impressed with the set of numbers. 17% increase in the ARPUs, that's the yield for the company, is very impressive and still at a low level and considerable scope for increasing. Free cash flow also will start to move up. And I think that next 2-3 years, it can still go at a compounding rate of about 15-16% or so. So very positive on Bharti. It's a company in which we and our clients have an investment. And I think if Vodafone is going to get impacted, then a lot of the subscribers can flow to Bharti and Reliance Jio. So they'll take even more advantage of the duopoly which they are in. And any relief from the Supreme Court will be more than welcome. So very positive for Bharti Airtel, amongst the few nifty stocks which have been able to sustain a high teens compounding growth for last 10 years.
By the way, check out Protean in the pre-open. The stock is down 19%. The news is that the company has not been shortlisted by the Income Tax Department for the PAN 2.0 project. And this obviously is going to be a big blow if this is how it plays out. Let's see if this is the final word on it or not, because Protean has been doing a lot of the back-end architecture for PAN and for other things like ONDC as well. And this could be a bit of a blow. Very quickly, Dipan, your thoughts? Otherwise, the stock was doing really well, an institutional ownership, etc. But this has come as a rocket out of nowhere.
Well, I think, this is client concentration at its best for you. Those risk factors exist. And Protean per se also is trading at very expensive valuations for a company where growth for last 5 years have been pretty much stagnant. So I think perhaps the move is justified, but let's see, understand exactly what the outcome of this is from the management, I guess.
Any other sort of stocks, etc., come your way? Anything which is still a little out of whack, dislocated valuation-wise, Deepan?
No, these markets are priced to perfection over here, and we are really struggling to find good quality stock ideas. My understanding so far is that this earnings season has not been that great. It's not been across the board better for all the companies. Even within the sector, you have outperformers and underperformers. So I think life for the next 1 year or so is going to get a bit tough for fund managers and investors, where they have to find selectively good quality stocks to invest in. It won't be across the board. So I'm just kind of analyzing what numbers have come through so far and trying to make out a shopping list, but it's not ready as yet, and I'll share it once I have something interesting to discuss.
All right, Deepan, we leave it there. Thank you very much for joining us. It's always a pleasure having you here on CNBC TV 18.